think we are the only thing standing between these people and cocktail hour, so we will make this as painless as possible. But we're here to talk about how the growth of digital assets, and in particular stablecoins, have ignited debates and discussions, many of which are taking place in these halls today, about whether money is shifting from a state-controlled or mostly state-controlled entity to a fully free market product, and what that might look like. So I'm honored to be joined by Anthony Pompliano, a man who needs no introduction because you already know him. You follow him on X, you read his Substack, you watch him on various news programs, you read his book. He's everywhere, and he is an expert voice on this. So we really want to hear what you have to say here today, but I really want to talk about something that you brought up backstage earlier today, and that was an interesting announcement by Tesla and Elon Musk last week about Optimus, this new kind of humanoid or robot, and then also a self-driving cab. Now, whatever people might think about that in terms of the technology, you think that it will actually lead to a real revolution in stablecoin. And I was wondering if you could expand on that.
Yeah, well, you should come everywhere I go and just do that intro. That was great. It made me feel good. If you think about most of the technology that people are going to talk about here is crypto. Crypto is not actually a revolution. Crypto is one input to a much broader story, which is the story of automation. And so if you think of many of the technologies that people are talking about today, there's crypto and blockchain, there's artificial intelligence, there's machine learning, there's robotics, et cetera. It's all part of this automation story. And the reason why I think that's so important is because there is a new use case for money that no one is really talking about. The machines need money to transact with each other. And so the example that I usually use is this is a long-term trend. So you can think about going to a toll booth, and at that toll booth you used to drive your car up, stop, you would take physical money, and you would hand it to another individual. At some point the state said, well, why are we paying someone an hourly rate to sit there at the toll booth? Let's automate them away. And so we created toll booths where you drove up and you dropped the money into a little basket, it auto-counted, and then you got to go on the street. Over time, somebody came up with the easy pass. Well, rather than me stop, why don't I just put a sensor in my car? I'll drive, it'll read the sensor, and then I'll pay at the end of the month, kind of like a credit-based system. What eventually is going to happen is that the car is going to have a digital wallet, and it's going to be able to pay directly the state or a machine. But it's not just things like that. You then get into how do the humanoid robots pay each other? How do AI agents pay each other? They're not going to use 1 or 2 day settlement times. And so this story of crypto, stablecoins, payments is really just one component of a much broader automation story. And so when people ask, like, why do we need this technology? It's because the machines and the rise of automation literally do not have a currency that they can use to do instantaneous transactions without this technology.
Yeah, I find that so fascinating, and I refer to it as the automation of capitalism, which, I mean, it seems so far off to me, but it really isn't. Where do you think in that timeline we are right now?
A far away.
Okay, so maybe it is so far off.
Well, I think that, when people look at a self-driving car, they're pretty blown away. If you look at what the humanoid robots can do today, you're pretty blown away. But what I find solace in is that is the worst that technology is ever going to be moving into the future. It only gets better from here. And so if you look at payments, there's a lot that is left to be desired when it comes to payment technology, specifically in crypto and blockchain. One of the things I always point out is imagine if you went on the internet and to get to google.com, you had to type in an IP address. There's a time where you had to do that before human readable addresses. I've been here a long time. I still get kind of sweaty palms when I'm going to go put in that long string of letters and numbers to send a transaction. And so you need to not only get the technology to work, but you also need to get the user interfaces, the user experiences to a point where people trust it. There was a time where people did not trust putting their credit card on the internet. There will be a time where it is highly debated whether you should trust your AI agent or your humanoid to spend your money.
Yeah.
And so that will take some period to expire, then people will be comfortable with it, and then they'll use that money. But it's just time and familiarity is really important.
And I think that's a great segue back into the main kind of philosophical conversation we're meant to be having right now, which is whether money should be state-controlled and will remain state-controlled or partially state-controlled, or whether it should be fully on the free market. And I wonder how that plays into your vision of the future.
Money is not state-controlled today, which people forget. Gold is really the only thing that is true money that has survived for thousands of years. Everything else, for the most part, is credit. It's an IOU. It's a debt-based instrument. And so the state has a monopoly on that. And if you go back and you study currencies, people forget in the United States, like there was literally hundreds of currencies within the United States. It was so rampant that people would literally just spin up a currency, which sounds a lot like in crypto, people are just spinning up coins, right? And what you didn't know was, is there actual gold or silver or whatever the commodity is in the bank or not? And so we had to standardize it and get kind of one single debt-based instrument. Now, moving forward, what I think people are really trying to figure out is the currency that people choose to use, is it going to be controlled by the state or not? What I find fascinating is we already have a framework. In your traditional financial life, you have a checking account and you have a savings account. And so what do? You save in your savings account, you leave money in your checking account for kind of your daily expenses, and then you have this investment account where you go and convert the currency into other assets. In crypto, we are starting to see that same framework play out. You are going to save in a store of value like Bitcoin, you are going to spend in a fiat stablecoin, and then you are going to buy other investments, whether they're crypto assets or other types of traditional assets. And so this rise of different currencies, kind of a dual currency world, is only possible because we've dropped the friction down to switch back and forth between the two. If I am in the United States and I want to come over here and I want to use, let's say, a euro, I got to go to a money changer, or I've got to go walk to an ATM. I've got to do all these things to actually get access to that currency. Instead, if I can just press a button on my phone and switch between currencies, I'm much more likely to have a dual currency life than what is currently available. And so I think that's really the world that we're headed towards. Is it's not an either or. It's not, does Bitcoin win or does the dollar win? Does Bitcoin win? Does the euro win? Instead, it's this technology is going to lift those fiat currencies up. These stable coins are going to go to the fastest, cheapest blockchain. And then you're going to have a store of value asset that really acts as that savings account, and that checking account will be for day-to-day payments.
I'm going to push back just a little bit because
push back all you want.
I've been here for just about a day, and I usually live on the US dollar, but I haven't exchanged currency. I went on a trip to Europe this summer, a long trip, 3 weeks. I did not exchange any currency because I have a phone and I have a little button I can push, and that's Apple Pay, and that's linked to my credit card. So how is this going to be different than that, and why would people prefer stablecoin or whatever it might be over what we already have on our phones?
You didn't spend any money yet. It's all IOU. You got to pay off the credit card at the end of the month. And so one of the things that has been amazing, and I live in the United States, so I focus mostly there, but one of the amazing things in the United States is that we are a credit-based economy. It has led to massive production, growth, innovation, and what is probably the greatest economy ever constructed. One of the downsides is that we're a credit-based economy, and so if you look at credit card debt, it's through the roof. If you look at interest payments on that credit card debt, it's through the roof. I think the average credit card in America right now has a 23% interest rate.
Yeah.
23%, right? And if you think about who's paying that, it's the people who didn't pay off their credit card at the end of the month. And so in a certain angle, it is predatory because you're basically giving a very high interest rate to a group of people who can't afford it. Now, the reason why they're doing it is because the free market has determined that they're the highest risk not to pay. And so it's this very interesting thing of, would a business rather get paid with credit, where their counterparty is a Visa, MasterCard, et cetera, or would they actually rather receive the currency today?
Sure.
Chargebacks, right? You get into all these kind of nuances of payments, but I do think that we've done the best we can with the current technology and currency, but a local business here would love to just get paid with the actual currency, not on credit.
Yeah, and I do realize I should check my privilege there. I have access to a credit card, right? And there are so many people who have these barriers to entry in terms of finance, and that's where these coins and digital assets come in. And so I am curious, as digital assets become more mainstream and larger companies get involved, how do we make sure that those same barriers don't then present themselves the way that they do with our current currencies and credit system?
Yeah, one of the interesting things is, if you look at the wealth inequality gap in America, it has nothing to do with any of the things people usually point to. It almost exclusively is a education gap. And so if you think of how inflation works, inflation basically pushes investment assets higher and it punishes those who sit in cash. And so the story of the last 40 or 50 years in America has literally been, did you buy investments or did you try to save? Yeah. If you tried to save, if you lived paycheck to paycheck, 100% of your wealth in your savings account, you got screwed. And it's not your fault, it's just you didn't know better or you didn't have the funds to do it, and so inflation hurts you. Yeah. Every rich person, though, celebrates when inflation goes up because all the asset prices go up. So there's this really interesting chart that recently came out a couple years old now, 3 or 4 years. And what it showed is that the middle class in America is shrinking. And so it's a cause for celebration because what it showed was people were moving up into a higher income bracket. So you're getting a collapsing of the middle class because people are moving up. And the way that they define it is $100,000 income or higher, so a higher income bracket. And so people are getting wealthier. But when you do it on an inflation-adjusted basis, actually people are not getting wealthier, right? Because the cost of goods is going up so high. And so why that is important is because you now don't need to have any understanding of what I just described. If you simply say to somebody, hey, when you save, you're not going to save in dollars, you're going to save in X asset. When you spend, you're going to spend in dollars, euros, whatever, on X platform. That becomes a very simple framework, and you can almost put it on autopilot. Right now, it's really hard, right? If I am trying to save, I put money in my checking account, okay, then I move some to my savings account. What do I put it in? Do I buy treasuries? What's a treasury? How much does it pay? What's the risk? Where do I go buy that? Yeah. Right? There's all these questions that come from it. And so I think what you're seeing young people do is just like put it on easy mode. This is for saving, this is for spending, go. And I think that it'll actually have a very profound impact on people's finances as they simply just save into an asset that does all the work for them. No different than what your primary home has done. You know, most millionaires, it's because of their real estate. Mm-hmm. They just are saving into it essentially with those mortgage payments, and that really is what is creating wealth for them.
Yeah. With just a few minutes left here, I want to switch gears and I want to talk about the regulatory environment and regulation in general. You know, as this industry becomes more mature, we're seeing a lot more attention from regulators in general. What's the immediate, I guess, challenge that regulations are posing to these innovations? And then, you know, how should this community kind of navigate those challenges? And I realize that's a large question, so maybe just an example of something you've encountered.
One of the great paradoxes of this entire industry is that the crypto industry will say the current administration has been highly combative to this industry. On the other hand, you can make a very strong argument that Gary Gensler has been the single most helpful regulator to the industry.
Certainly drawn a lot of attention to it.
Well, he's brought attention, but if I was to say to you, which SEC chairman approved the Bitcoin ETF? Gensler. Which SEC chairman approved the Ether ETF? Mm-hmm. It was Gensler. Which SEC chairman approved the Coinbase IPO? Right? And you go down this line. And so, you know, the paradox is it was done in a way where their hand was forced a little bit. They probably had to do it earlier than maybe they wanted to do it. But if you evaluate the current administration just on pure results, even if they didn't want to do it, which again is up for debate, they still have seen a lot of stuff get done underneath them. And I think what people in the industry are asking themselves is, okay, if we perceive them to be combative, what would happen if we had somebody or an organization that was actually supportive? How much more would get done? What I have constantly said to the industry is everyone has always asked for regulatory clarity. Be very careful what you wish for, because getting regulatory clarity does not mean you get the answer you want. It means you have clarity. And so, yes, it makes sense that you would want somebody who's supportive of the industry. But just because somebody is supportive of the industry does not mean all of a sudden that everything is not a security, or name your thing that people want to see as an outcome. And so what I think we actually want is we want really, really experienced and intelligent people making these decisions. Sure. And so for a long time in American politics, I've always suggested that if you are a politician and you have oversight over an industry, there should be two things that are true. Mm-hmm. If that industry puts you in that chair, they basically are your biggest donor, you don't get to have oversight over them. Yeah. The second thing is that we should have what I call kind of the dummy test. If you're going into a hearing, if you're going to vote on something, you have to take a 5-question multiple choice test. If you don't pass all 5 questions, you don't get to vote. And so if you think about crypto, something as simple as, what is a blockchain? And you have 4 multiple choice. If they can't answer, why are they actually overseeing some of this stuff? Why are they voting on the legislation? And so I think that's really what people want, is they want folks who understand the industry, have used the technologies, and say, listen, whether I'm a supporter or a detractor, I at least can have an intelligent conversation about the pros and cons, because I think that's where you get the best outcomes, is you don't want people who are too optimistic, and you don't want people who are too pessimistic. That rationality in the middle is really important, because it weighs both the pros and the cons of these decisions and probably ends up with something that sets the foundation for the next 10, 20 years of an industry.
Yeah, and I think that would be a problem beyond this industry if
100%.
you had to do that test. But it just shows that 10, 20 years from now, you'll have people who are native to this, who are hopefully in office.
This is a very important point. So, I've been very fortunate over the last couple of years to meet many of the top investors in the world. And one of the things that always surprises me is how many of them were convinced by their kids. So, almost to a T, every single one of them. I have a teenager. I have somebody in my early 20s, my son, my daughter, whatever, they're into it. Even Jamie Dimon. People forget. I think Jamie Dimon went out and he said, if anyone at JP Morgan is trading Bitcoin, they should be fired.
Oh, he said yeah.
And a week later, he came out in another interview and said, my daughter called me and said, hey, Dad, I own some Bitcoin. Right? Yeah. And so, it's kind of hard to have those two things true at the same time. And so the same is true of politicians. Maybe it's their kids. In some instances, I know it is their kids. Mm-hmm. But also, they're surrounded by young staffers. And so many of the times that I've engaged with anyone in the political arena, it has been the young staffers who are trying to convince the politician to be more open to these ideas, spend more time on it, et cetera. And so I do think that young people being informed and then working upwards in these organizations is an important part. And ultimately, that is how things are getting done.
Yeah, and I think in prior conversations, you've made the point to me that, and I think as a journalist, I am allowed to say this often with older politicians or more well-known politicians, it's their staffers who are making the decisions completely, 100%. For them.
The most egregious example, forget politics for a second, either side of the aisle, but there was a politician in the United States, Dianne Feinstein, who was very, very sick, was in a wheelchair, and she was being brought to go vote on legislation. Obviously somebody was telling her what to vote, right? And so it's is it the politician that's actually in control, or is it the staffers? And I think that's why you see crypto companies across the industry, very large companies, going to Washington, D.C. and spending so much time, not just trying to educate the politician, but also educate the staffers, because you want to attack from both sides from an education front.
Yeah, and certainly as a journalist over the last, 5 or 7 years, I've seen a huge increase in pitches in my inbox from lobbyist groups that represent the crypto industry. So it's certainly there, and there's a lot of money there as well. Okay, we have about 1 minute left, and I want to just address the audience here. There are a lot of innovators here. There are a lot of people investing in this space, and I want you to kind of guide us here. What piece of advice, what's the one piece of advice you would give them to kind of navigate this rapidly changing landscape?
I am on a crusade with a single message, which is you have agency. We live in a world where everyone tells you that the world acts upon you, you're a victim, the world is this big bad place, just sit there and be happy with whatever happens. But every single successful person I know, at some point in their life, realized that they have agency and they had a propensity for action. They went and they accomplished whatever they wanted to do. They acted. And so if you think about the importance of agency, it is not only that you have the right and the ability to act, but it also means that you can have the intentionality of trying to design the future that you want to see and then going and building it. And I think that this idea of agency is so important in a technology sector where literally the only things that end up being produced are the things that somebody sits down and says, I am going to build X. And so if you look at all of the technology that we're talking about, whether it's the Stellar blockchain, Coinbase, Bitcoin, or anything else in between, it is somebody sat down and they said, I am going to build this. And the beauty of the technology sector is that it is usually a very meritocracy, where people end up saying, I'm going to put an idea out in the world that I built, and it will either survive or die based on the merit in which the market perceives it at. And so every single person here, whether you consider yourself an investor, you consider yourself an entrepreneur, engineer, or anything in between, you have the ability to actually build things. And so if you are allocating capital, you're building a portfolio. That portfolio expresses a view in the world. If you take risk, then you will be rewarded if you're right. You'll be punished if you're wrong. You're building something. If you're an engineer, go and actually build technology, write software, solve someone's problem. But this idea of agency is so important because everything in the world is telling you you have no agency. We're talking about governments telling you what to do. We're talking about all these different things. But literally, it is just individuals who wake up one day and they say, I'm going to go build something, and then they go do it. And so every single person here has the ability to do that. It's just whether you choose to actually act on it or you wake up 15 years from now and you say, man, I wish that I had done X. And then you've got to live with a life of regret.
Be a doer. Well, Anthony Pompliano, founder and CEO of Professional Capital Management, thank you so much for joining us.
Thank you guys for having me.
Yeah, and thank you. I think we're going to hand it back over to the host.